Let me check. So, yes, perfect.
Okay, I think, did somebody press live or we're just gone live?
Oh, okay.
It's fine, there's no one else online yet.
Let us wait for the attendees. Jonathan, how we will start today's?
Yeah. Okay, Ali. I'll open things up, and I'll introduce you, and then are you able to? Do you know how to? Are you able to share your slides?
Yeah, I have. Let me share. Oh.
Yeah, we can see that, Ali. Yeah.
Excellent. Yeah, that's great.
Yeah.
All right, good.
Okay.
So, yeah, I'll share those slides, and then I'll introduce yourself, and away we go.
Yeah. That would be fine. If you start at the beginning, and I will continue with the training session, and after the training session, the question answer session will be held, and that's all, like we do in our other webinars.
Yeah. Okay.
Okay, so Ali, I'll be here as well in the background for any help you may need. So if hopefully you won't, but I'll be here anyway.
Yeah. Thank you, Linda.
Okay.
I think there are 5 attendees.
There are.
Jonathan.
Yeah. Good morning, everybody, and welcome. We're just a couple of minutes ahead of what is 3:30 your time locally. We will. Please bear with us for a couple of minutes. We'll get to 9:30. Oh, sorry, 9:30. 9:30 in the UK where I am. 3:30 in the afternoon where you are. Before we commence the session, so just bear with us for a couple of minutes as the attendees, the participants arrive. Thank you very much indeed. Right, good afternoon, everybody, and a very warm welcome to the latest Institute Bangladesh CPD webinar. I do hope everybody is keeping well. I hope you and your families remain safe in what are still uncertain times around the world, whether you are UK, Bangladesh, based, the global pandemic has affected us all over the last 12 months, but I do hope we as the Institute of Financial Accountants do hope that you're all keeping well. My name is Jonathan Barber. I'm the Head of Business Development for the Institute. I'm opening the webinar session this morning, which will culminate in me introducing today's speaker and then handing over to your speaker, Mr. Ali Akbar Chowdhury. So I will do that in a moment. Just a little bit of housekeeping from me. Please bear with us if we have any technical issues. Hopefully we don't. And the sound and the visual is absolutely fine at your end. Sometimes it is your connectivity that causes issues and problems. So if you have a problem, please do check that first before raising the question. The questions today that you have, please do post them in the Q&A box, the facility. You're typing those into that box, and Mr. Chowdhury will pick those up at the end of his presentation. But I do hope there are a number of questions that come from you today around the subject matter. Today's agenda, a welcome as we're going through from myself. I will introduce our speaker, Mr. Ali Akbar Chowdhury, in a moment. And today's session is all about transfer pricing regulations in Bangladesh. Just some other matters to run through from an institute perspective, if I may. Mr. Chowdhury is also the institute's regional director and international representative for Bangladesh. He and I work very closely together on a weekly basis, and I am very keen that you provide us as members with your feedback. We also would welcome any support that you can provide to Mr. Chowdhury, as well as any recommendations. And when I say recommendations and feedback, that could be for the next future CPD webinars we run. It's all about looking to provide value. It's all about looking to provide relevant content for those webinars. So please, any recommendations, anything that you would like to see covered, please let Ali know, please let I know. From a feedback perspective, we are your institute and we're here to support you. So please, your feedback, anything that you like that we're doing, anything that you'd like to see us doing locally in country, please let us know. And your support, well, that might be in terms of, you might be an expert in a particular field, a particular area. Would you be willing to talk for 45, 50 minutes on a particular subject as an expert that would provide value to local members? Support as well. If you know colleagues, if you know acquaintances who would benefit from membership of the Institute of Financial Accountants, then please let Ali know, and he can converse with those individuals to tell them about institute membership and to support them with that membership journey. We do have future Bangladesh CPD webinars planned, and we will publicise those in the coming weeks. My last request is to members who've not yet renewed their membership for 2021. Can you please do so as a matter of urgency? That is a two-stage process. It is one about making your membership fee and paying that, and it is also about completing your mandatory member declaration. Both elements do need completing for you to have renewed your membership. The Institute has been in contact with members since October of last year with regards to the renewal process. I know that Mr. Chowdhury has also been in contact with a number of members, whether it be via telephone or email, to remind them and to support them with that process. I don't mean to sound harsh or hard here, but if you haven't renewed your membership by the 31st of March 2021, you will lapse. You will no longer be a member. We don't want that to happen. Please do renew. But can I also just welcome any non-members of the Institute on today's webinar. I think we had over 60 registrations for today's session. Great that there are a number of members joining us, but please, if you are a non-member and you would like more details about the Institute of Financial Accountants, please do contact Mr. Chowdhury and he can help you further. Penultimate slide from myself. We host both in-country webinars and CPD events. We also have a number of international webinars that I would just draw to your attention. Technology, wherever you are in the world, is a key matter these days for the accounting profession. We are holding in March 2 technology-led webinars, one next week on the 11th, 10 a.m. start UK time, and one on the 25th of March, an 11 a.m. start UK time. We are also holding 2 UK branch events on the 11th of March and on the 23rd of March. They both start at 12 p.m. midday UK time. To access those, to register for those, please do visit the Institute website, www.ifa.org.uk/CPD. Do have a look around that particular section and register for what you find appropriate and of interest. Something for the future, hopefully when the global pandemic has really sort of gone away and life has returned to normal. The Institute are looking to run a London International Conference on the 16th of June 2022. So something to bear in mind, talk to Ali and myself about. Can I kindly introduce today's speaker, Mr. Ali Akbar Chowdhury. He will be talking about transfer pricing regulations in Bangladesh. I thank him for putting in the time and the effort to prepare for today's talk and to present. Mr. Chowdhury is a tax accountant specializing in international tax law, double taxation agreements and relevant domestic tax laws in Bangladesh. Mr. Chowdhury is the principal consultant of A. Akbar Chowdhury & Co. and is also the academic director of the Certified Public Accountants and Tax Advisors of Bangladesh. As I mentioned earlier on, he is also the Institute's regional director and international representative for Bangladesh. He has also completed Bachelor's of Laws, LLB programs and a postgraduate diploma in tax management from the University of Dhaka. He's a fellow of the Institute of Financial Accountants, the Institute of Public Accountants of Australia, and of the CPA UK. So I'm delighted to welcome Mr. Chowdhury as today's guest and today's presenter. As I say, I thank him for his time and we look forward to hearing his session today. Ali, enough from me. I will stop sharing my slides and allow you to share yours and start your presentation, but welcome and thank you.
Thank you, Jonathan. Assalamu alaikum and good afternoon all. Welcome to the IFA CPA Bangladesh webinar on transfer pricing regulation in Bangladesh. I'm Ali Akbar Chowdhury here with you today's webinar. Today's webinar is based on the transfer pricing regulations in Bangladesh. We will talk about the transfer pricing and the transfer pricing regulation in Bangladesh. You know that the transfer pricing is a wide term, and we will just discuss on the topic of the transfer pricing regulations in Bangladesh. So the National Board of Revenue NBR of Bangladesh has adopted transfer pricing regulation by incorporating a chapter on the transfer pricing in the Income Tax Ordinance Chapter 11A through Finance Act 2012. The aim of the rules is to ensure the profits taxable in Bangladesh are not transferred to foreign countries, especially in low taxation countries, or understated or losses overstated by manipulating intra-company or related company transactions. Let's look about what is the transfer pricing. We can see the definition of transfer pricing. Transfer pricing refers to the setting of prices for international transactions between associated enterprises involving the transfer of property. These international transactions are also referred to as controlled transactions between associated enterprises as distinct from uncontrolled transactions between independent enterprises. If we look at the definition of the transfer pricing, we can find some keywords. Here we can find that the international transaction, associated enterprises, property, controlled transactions, uncontrolled transactions, independent enterprises. Let's look the definition of these key terms based on the transfer pricing regulation in Bangladesh. So first of all, the international transaction, as per section 107A of the Income Tax Ordinance 1984, the chapter of the transfer pricing in the Income Tax Ordinance 1984, international transaction means a transaction between associated enterprises, either or both of whom are non-residents, in the nature of purchase, sale, or lease of tangible or intangible property, or provision of services, or lending or borrowing money, or any other transaction having a bearing on the profit, income, losses, assets, financial position, or economic value of such enterprises, and includes a mutual agreement or arrangement between two or more associated enterprises for the allocation or appointment of, or any contribution to, any cost or expense incurred or to be incurred in connection with a benefit, service, or facility provided or to be provided to any one or more of such enterprises. B. A transaction entered into an enterprise with a person, irrespective of whether such other person is a non-resident or not, other than an associate enterprise, if there exists a prior agreement in relation to the relevant transaction between such other person and the associated enterprise, or the terms of the relevant transaction are determined in substance between such other person and the associated enterprises. If we look at the international definition of international transaction from the income tax ordinance, we can generally term international transaction as a transaction between two parties, cross-border transactions. But in transfer pricing regulation of the income tax ordinance of Bangladesh, the international transaction refers to transaction between associated enterprises. Okay, we talk about associated enterprise and independent enterprise. Associated enterprises are enterprises under common control. This will generally to be the case where the same persons participated directly or indirectly in the management, control, or capital of both enterprises. Suppose there are two enterprises and a person who is holding the share of both enterprises, that would be associated enterprises. That means there are a common control of a person or any other enterprise. Section 107A of the Income Tax Ordinance describes the definition of associated enterprise in detail. If we go to the section 107A2, we can find a detailed description of the associated enterprises. This definition is in accordance to the Income Tax Ordinance of Bangladesh Transfer Pricing Chapter. If we look at the definition of independent enterprise, the independent enterprise means an enterprise that is not associated enterprise. That means the independent enterprise is the opposite to the associated enterprises. Independent enterprise are not associated with one another. Let's look at the definition of property in accordance with the Income Tax Ordinance section 107A. Property includes goods, articles, things or items, patents, invention, formula, process, design, pattern, know-how, copyright, trademark, trade name, brand name, literally musical or artistic composition, franchisee license or contract, method, program, software, database, system, procedure, campaign, survey, study, forecast, estimate, customer list, technical data, any aspect of advertising and marketing, any item which has substantial value or any other intangible property. This definition is based on the section 107A7 of the Income Tax Ordinance. In general term, we know that the property what it means, but in the Income Tax Ordinance, this is the definition of the property. That means the property in the transfer pricing regulation of Bangladesh, property includes these title of items. Then we found the controlled transaction and uncontrolled transaction from the transfer pricing definition. Controlled transactions are transactions between associated enterprises for the transfer of property or services. So if two or more associated enterprises involved in any transaction, those transactions will called as controlled transactions. In other hand, uncontrolled transactions means a transaction undertaken between enterprises not being the associated enterprises. That means the transactions between independent enterprises are uncontrolled transactions. We can find in the section 107A5 the international transactions. In the definition of international transaction in the transfer pricing regulation of Bangladesh. So in our transfer pricing law, the international transactions stands for the controlled transactions. In our transfer pricing regulation, we will find the international transaction term, which will be the controlled transaction. Let's go back to the transfer pricing definition again. We found that the transfer pricing refers to the setting of prices for international transactions. That international transactions are, as per the definition of the transfer pricing act in Bangladesh, that means the control transactions between associated enterprises, those enterprises who have a common interest involving the transfer of property. We know the definition of the property as per the income tax ordinance. These international transactions are also referred as controlled transaction. We know the definition of the controlled transactions. Controlled transactions are the transactions between associated enterprises or associated companies, uh, as distinct from uncontrolled transactions between independent enterprises. Independent enterprises involved in the transactions are uncontrolled transactions. Let's look with an example. Uh, Assume that Enterprise X manufactures bicycles in Bangladesh. Enterprise Y distributes these from Hong Kong. So there are two enterprises or two companies. One is X and another is Y. X is working in Bangladesh. The operation of the company is manufacturing bicycles, and Y is working in Hong Kong, and the activities of the company Y is to distribute those bicycles to the end users. Both X and Y are 100% owned by Enterprise Z. So X in Bangladesh and Y in Hong Kong, and both enterprises are 100% owned by the Enterprise Z. Because Z participates directly in the capital of both X and Y, they are all associated enterprises. As at the Z is the owner of X and Y, the transaction between X and Y will be controlled by Z because both are the associated enterprise. When selling bicycles on the market, Z has no control over the price. When selling bicycles on the market, Z has no control over the price at which one bicycle is sold, because we know that the price will be determined by the demand and supply. The reason is that prices are set by supply and demand. Currently, suppose currently the market price for one bicycle is 100 US dollar. However, Z does control any transactions between X and Y. Z can control transactions between X and Y as X and Y are subsidiary of Z. Therefore, the internal sale of the bicycle by X to Y is called a controlled transactions. The price charged for this transaction is what is called a transfer price. So the Enterprise X is selling bicycle to Enterprise Y, and Enterprise Y is distributing the bicycle to the customers. Here, the transactions between Enterprise X and Enterprise Y is called controlled transaction, because these transactions can be controlled by Enterprise Z, because the Enterprise Z is the 100% owner of the share of Enterprise X and Y. So the price charged for these transactions, price charged for the controlled transaction, is what is called a transfer price. Okay. The price at which one bicycle is sold by X to Y affect their individual financial results. Remember, this is the control transaction. The transaction between X and X and Y is control transaction. If X charges a high price, X makes more profit. If X charges a low price, Y makes more profit. And this profit can be controlled by the company Z. For a commercial perspective, the price doesn't matter. The financial result of X and Y are consolidated because for the shareholders that it doesn't matter which of the two companies make the profit. As the company Z is the owner of X and Y, if X profit more, Y makes profit less than X, the total profit would be same because the X and Y are holded by the company Z. So in for a commercial perspective, the prices not matter, but from a tax perspective, it does matter. Why it is matter? X is taxed in Bangladesh because X is registered in Bangladesh, and Y is taxed in Hong Kong. Suppose the corporate tax rate in Hong Kong is 16.5%. In Bangladesh, it is 25% for the listed companies. Z wants to see as much profit after tax as possible. That is the target of the business. They want to see as much profit after tax as possible. So Z can use its influence as a shareholder to set the prices in such a way that the profits are highest where taxes are lowest. In this scenario, if Z wants to earn more after tax profit, the price will be the more profit will be earned by the Y enterprise. So this is the main headache of the income tax authority, that the associated enterprises can do using their control over the transactions. So let's look at another term, the goal of transfer pricing rules. Why the countries are so concerned about the transfer pricing rules? Why in Bangladesh the government has adopted transfer pricing rules? Let's look at the goals of transfer pricing rules. There are large difference in tax rates between countries. If left unchecked, the practice could lead to the shifting of profit from high tax countries to low tax countries. If we look at our previous example, if it is not controlled by the government, that can manipulate intra-company transactions and can avoid tax in Bangladesh and can earn more after tax profit using the tax rate in Hong Kong. So the goal of the transfer pricing rule is to control this kind of transactions of the associated enterprises. If we can read again, there are large differences in tax rate between countries. We know that the lots of countries here in the world are called as tax haven. They have low rate tax, but some other countries have a high rate tax. If it left unchecked, the practice could lead to the shifting of profit from high tax countries to low tax countries for what the business owners are intent to get more profit. Even though less likely, it can also be the case that the pricing policy leads to multinationals reporting too much taxes in high tax countries and too little in low tax countries. Let's look at this paragraph. Even though less likely, it is not likely because every enterprise wants to earn more after tax profit, but if the skills and expertise of the multinationals are not sufficient to handle the pricing strategy, it will lead the multinationals reporting to much taxes in high tax countries and too little tax in low tax countries. As a result, the net tax profit will be much lower than the actual. So it is the it is not likely, but it is from the company's business owner's perspective. The main goal of transfer pricing regulation is to prevent both situations. That goal of transfer pricing rules is to prevent both situations and ensure that profits are taxed at the place where value is actually created. If the government or tax authority do not control transactions, then the profit will not be taxed properly where the value is actually created. Suppose in our previous example, if when the Bangladesh government didn't have the transfer pricing policy, it is back in 2011 or earlier. Uh, uh, this scenario, in this scenario, the company X will pay less tax, and company Y will earn more profit, and the consolidated profit will be much higher for the company Z. So the goal is to tax profits at the place where value is actually created. Let's look how the tax authority can tax the uh, profit at actual price value. Let's look at the term arm's length principle. Okay, in our transfer pricing policy, it is arm's length price. Arm's length price means a price at which a willing buyer and a willing unrelated seller, that means an independent enterprise or independent enterprises, would freely agree to transact or a trade between related parties, associated enterprise that is conducted as if they were unrelated, so that there is no conflict of interest in the transaction. Okay, you can find the definition of arm's length price at the beginning of the transfer pricing law, section 107A in the income tax ordinance 1984. But I am trying to describe arm's length price as easily as you can understand. Suppose arm's length price is a price that price that is which a willing buyer and willing unrelated seller, that means two companies, those are independent enterprises, those do not have any common interest or do not have a relation between them. uh, those parties can freely agree to transact or trade between them with a price, or the arm's length price is the price part associated enterprise will agree if they were not associated. Suppose if in our earlier example, enterprise X and enterprise Y were not associated enterprises, they will agree on a price based on demand and supply. So the arm's length price is the price that is charged for an independent enterprise to an independent enterprise. Okay. Let's have the determination of income from international transactions having regard to arm's length price. What the income tax authority will do. The amount of any income or expenditure arising from an international transaction shall be determined having regard to arm's length price. It is the section 107B of the Income Tax Ordinance 1984. This section explains that the amount of any income or expenditure arising from an international transaction. We know that the international transaction means in Income Tax Ordinance of Bangladesh, it means that the transactions between related parties, between associated enterprises, it should be determined having regard to the arm's length price. So the tax authority will calculate the arm's length price, and that they will evaluate the actual transfer price and arm's length price of the transfer of the property. Okay, now let's look how the arm's length price will be calculated. The computation of arm's length price. The arm's length price in relation to an international transaction shall be determined by applying the most appropriate method or method selected from the following methods based on the nature of transaction, the availability of reliable information, functions performed, assets employed, risks assumed, or such other factors as may be prescribed, namely a comparable uncontrolled price method. This is one of the method of calculating transfer arm's length price. Resale price method, cost plus method, profit split method, transactional net margin method, any other method where it can be demonstrated that one, none of the methods mentioned in clause A to E can be reasonably applied to determine the arm's length price for the international transaction, and such other method yields a result consistent with the arm's length price. Okay, in our transfer pricing law, there are 5 methods to compute the arm's length price. If we want to calculate the arm's length price, we can follow any one of the most appropriate method from A to E. If any other method where it can be demonstrated that 1 and 2 is the conditions, then such other method can also be prescribed for calculating the arm's length price. So the arm's length principle and calculating the arm's length price, we are following the international standard of the calculation of arm's length price. In this webinar, I am not going inside of the how we can calculate the arm's length price using the following method. We are just talking about the methods of calculating arm's length price based on the Income Tax Ordinance section 107C uh, 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 of the transfer pricing chapter. Okay, then let's check who will work for arm's length price on behalf of the tax authority. This is the section 107D of the Income Tax Ordinance 1984, reference to transfer pricing officer. The Deputy Commissioner of Taxes, with prior approval of the board, may refer to the determination of the arm's length price under section 107C to the transfer pricing officer. The transfer pricing officer, with prior approval of the board means the National Board of Revenue, may proceed to determine the arm's length price in relation to any international transaction. Okay, that is the person, the transfer pricing officer, who is responsible to work for the arm's length price. If the Deputy Commissioner of Taxes wants to refer the determination of arm's length price under section 107C, what we told earlier, if the Deputy Commissioner of Taxes want to refer it to the transfer pricing officer, the Deputy Commissioner of Taxes need prior approval from the board. The Deputy Commissioner of Taxes need prior approval from the board. The transfer pricing officer, with prior approval of the board, may proceed to determine the arm's length price in relation to any international transaction. Let's look at section 107E, maintenance and keeping of information, documents and record. Every person who has entered into an international transaction shall keep and maintain such information, documents and records as may be prescribed. That means the person or the enterprises involved in international transactions, this international transaction is the international transaction based on the definition of international transaction, which we find in the transfer pricing regulation, transfer pricing law of Bangladesh. The enterprises need to maintain books of records and keep information and documents. Okay, if anyone failed to keep, maintain or furnish information, documents or records to the Deputy Commissioner of Taxes, what will happen? Where any person fails to keep, maintain or furnish any information or documents of or records as required by section 107E of the ordinance without prejudice to the provision of chapter 15 of this ordinance, the Deputy Commissioner of Taxes may impose upon such person a penalty not exceeding 1% of the value of each international transaction entered into by such person. So the section 107G explained that if anyone related in international transaction and non-compliant with the maintaining books, records and documents, the Deputy Commissioner of Taxes may impose penalty, which is the maximum limit of penalty is the 1% of the value of each international transaction. Okay, now let's talk about the statement of international transaction, which need to be submitted to the tax authority. Every person who has entered into an international transaction shall furnish, along with the return of income, a statement of international transactions in the form and manner as may be prescribed. section 107 EE. So the every person, or that means the every enterprises who are involved in international transactions shall furnish a statement of international transactions along with the return of income to the tax authority. Let's look at if the enterprise fails to comply, or if the person fails to comply with the provision of section 107 EE of the ordinance. The Deputy Commissioner of Taxes may impose upon such person a penalty not exceeding 2% of the value of each international transactions entered into by such person. So if we fail to comply with the maintaining books, records, information, documents, the maximum penalty will be 1%. And if we fail to file the statement of international transaction uh, uh, as per section 107 EE, the Deputy Commissioner of Taxes may impose 2% penalty on the of the value of each international transactions entered into by such person. Let's look another compliance, which is report from an accountant to be furnished. Okay, the Deputy Commissioner of Taxes may by notice in writing require that person who has entered into international transaction or transactions that aggregate value of which as recorded in the books of account exceeds 3 crore taka, that means 30 million uh, Bangladeshi taka, during an income year. That means if any person involved in international transaction which is more than 30 million during an income year, uh, the person or the enterprise shall furnish within the period as may be specified in the notice in the form and manner as may be prescribed, which is prescribed in the income tax rules. A report from a chartered accountant or a cost and management accountant uh, regarding all or of a part of the information, documents and records furnished under section 107E. So if the deputy commissioner require that a person to submit a report from an accountant, the deputy commissioner of taxes need to notify the person or the enterprise by notice in writing that he need the statement, the report from an accountant uh, who is a chartered accountant or a cost and management accountant of the transactions. If the transaction is uh, above 30 million, that means 3 crore taka during an income year. The section 107F clearly prescribe this provision. If the person fails to furnish a report required by section 107F of the ordinance, the Deputy Commissioner of Taxes may impose upon such person a penalty of a sum not exceeding 3 lakh taka. That means 300,000 Bangladeshi currency. If the person, the enterprise fails to furnish the report before the Deputy Commissioner of Taxes, he can impose penalty, which the maximum limit of the penalty is 300,000. That means the 3 lakh taka. This is described on the section 107I of the income tax ordinance. Okay, if we go back to the maintenance um, and keeping of the information, the person who entered into an international transaction shall keep such information documents. If he failed, the Deputy Commissioner of Taxes may impose penalty, which is 1% of the value of each international transaction, the maximum limit. Another compliance is a statement of international transaction to be submitted with the return of income every year. If the enterprise or the person fails to submit the statement, the Deputy Commissioner of Taxes may impose a penalty, which is the maximum limit is 2% of the each international transaction. And another compliance is reporting, submitting a report from an accountant. This report from an accountant to be furnished if the Deputy Commissioner of Taxes may inform the person or the enterprise by notice in writing. So this is not mandatory for every international transaction. If the transaction exceeds 30 million, that is 300 crore in Bangladeshi currency, the Deputy Commissioner of Taxes may notice to submit a report. The report should be prepared by the chartered accountant or a cost and management accountant. If the enterprise fails, the Deputy Commissioner of Taxes may impose a penalty of maximum 3 lakh taka, which is 300,000 taka. Okay. All these are the transfer pricing law, which is in the chapter 11 of the transfer pricing of the income tax ordinance 1984. Now let's look at the income tax rules related to the transfer pricing. There are some rules related to the transfer pricing, the rule 70 to rule 75A. The rule 70 confirm that the determination of arm's length price under section 107C. If we look at the rule 70 of the income tax rules 1984, I am just telling the summary of the rule. In this rule, the determination of arm's length price under section 107C is clearly described. You can find this rule in the income tax rules 1984, which is added in the financial in the tax year 2012-13 by the Finance Act 2012. And the rule 71 is on the factors to be considered in judging comparability. Rule 72 is for the most appropriate method. Rule 73 is information and documents to be kept and maintained under section 107E, what we told earlier, that the compliance to be to maintain the information and documents by the person or the enterprises involved in the international transaction. Rule 74 is report from a certified accountant. This certified accountant means here the chartered accountant or cost and management accountant to be furnished under section 107F. What we discussed earlier, that the section 107F described that if the Deputy Commissioner of Taxes want a report from a certified accountant, he need to notify the person involved in international transaction by notice, and the person or enterprise need to submit the report from a certified accountant. If the person or enterprise fails to submit the report from a chartered accountant or a cost and management accountant, penalty may be imposed by the Deputy Commissioner of Taxes. The Rule 75 form of report from a certified accountant to be furnished under Section 107F. In Rule 75, we can find that the we will find a clear a template which may be used for the report of a certified accountant. Under the Section 107F. So that's all from the transfer pricing regulation in Bangladesh. Today I discussed the definition of the transfer pricing, arm's length price, and the rules and the regulation based on the transfer pricing law of Bangladesh, and the penalties which may be imposed by the tax authorities for the non-compliance of the transfer pricing, non-compliance of the person or enterprises involved in the international transaction. If we look back again from our first slide, what is transfer pricing? We have covered the transfer definition of the transfer pricing, some key terms, the definition of the key terms based on the Income Tax Ordinance 1984, associated enterprise, independent enterprise, property, the definition of the property based on the Income Tax Ordinance 1984, controlled transaction and uncontrolled transaction. In our transfer pricing law, the controlled transactions are termed as international transactions. So if we find international transaction in the transfer pricing law of Bangladesh, it should be referred to the controlled transaction in general term. We discussed about an example how transfer pricing works, and the goal of the transfer pricing rules, the arm's length price, who is responsible for the determination of arm's length price for the tax authority, how to compute the arm's length price based on the transfer pricing law, and some compliances those need to be maintained by the enterprises or person involved in international transaction, penalties of the for non-compliances, and the rules on transfer pricing related rules on the Income Tax Rules 1984. As you know that the transfer pricing is a wide term in Bangladesh. It is a very new concept, and the government tax authority is trying to work on the transfer pricing as the international transactions are increasing day by day in our country, and the expertise of the income tax authorities are day by day in pricing on the transfer pricing, and the professionals, those who are working in the multinational companies, need to know the basic of the transfer pricing. And if you want to study more, you can see the rules of the Income Tax Rules 1984, Rule 72, Rule 75, and the best reference would be the Income Tax Poripotro 2012-13, and the Chapter 11A of the Income Tax Ordinance, and the following rules of the Income Tax Rules 1984. So that's all for the from my presentation. Now the question answer session. If you have any question, you may ask the question over the question answer tab you can find on the bottom of the of your application. Just let me check. Oh, I don't have any question. I found there are attendees. If you have any question, you may write or raise your hand and write on the bottom of the question answer tab of your Zoom webinar. I think there is a question. Okay, Muhammad Shahadat Hussain, could you explain again CUP method? Okay, in my presentation, I just told about the methods of transfer pricing. Hopefully, if we can arrange another webinar on computing the arm's length price, we can talk all the methods of the arm's length price based on the section 107 C. So this is it will take longer time, I think so, for the talking about the five methods here in the Transfer Pricing Act 107C. So Muhammad Shahadat, if we can arrange another webinar on the transfer pricing, that maybe the calculating or a calculation of the arm's length price, the methods of the calculation of arm's length price, that would be helpful for. Do you have any other question related to the topic? Yeah, Muhammad Atikur Rahman. Regradation the transaction limit of PDT 30 million. Is this only controllable transaction or only independent transaction or both? Okay, let's talk about the 30 million. Look, here the term is international transaction. In our transfer pricing act, the international transaction means controlled transactions. So the transactions between associated enterprises. If the transaction is between independent enterprises, the transfer pricing, this section will not applicable, as it is described in the section that let me read the sentence. A person who has entered into international transactions or transactions the aggregate value of which, as recorded in the books of accounts, exceed 3 crore taka. Okay, if the transaction is international transaction, so if the transaction is between associated parties or the controlled transaction, then the DCT may ask to furnish statement from the from an accountant, a report from an accountant, but it is not mandatory for submit to submit all transactions over 30 million. Okay, let's have is there any question? I think we are at the end of our session. Now I can answer you any question related to the Institute of Financial Accountants. If you have any membership related queries, what Jonathan told earlier, you may communicate with me, and at the end I um, remind you again to complete the annual membership return. Those who have not yet completed the annual membership return and the annual subscription payment, I found that almost all have already paid the annual subscription. You will be notified by email. So that's all for from my side today's webinar. Thank you all the members and non-members who are present to today's webinar. You take your time, and I tried to give a basic idea on the transfer pricing regulation of Bangladesh, and hopefully we will work in international taxation issues. We will have some more webinars on the international taxations. If you have any topics which may be helpful for your professional activities, you may suggest me by email or by WhatsApp. Thank you all for today's session, and I would like to thank you, the IFA team, those who working on the back end of the webinar session. And thank you all. Have a nice day and a nice weekend. Thank you.